Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey traders, checking in on the broader market. So today was my off day where I don't do the live streaming, and I was able to trade at the open and traded RCL a bunch today for the first time ever. I'll go over that in the next video we're going to look at with some more volatile tickers. But just for the broader market, we're looking at the higher low every single day pattern breaking. So that was 6 days in a row, and it broke when we broke the low of Thursday, 275.47. So what that tells us is we are now seeing daily consolidation underway, and we know that a daily higher low is the most likely scenario because anything above 243.90 is a daily higher low. So at this point, consolidation is going pretty much ideally for the bulls. You can see on the hourly time frame with extended hours on, we ended last week in a clear hourly uptrend, and we started this week in a clear hourly downtrend, but a solid bounce into the end of the day. You could call this a little hourly trend change back to the bulls. Either way, it's a solid bounce into the end of the day, and we didn't close with much weakness compared to where we were at the low of the day. So if we're going to see further pullback from here, we're going to have to continue the lower high, lower low pullback, meaning we have to break 271.41 tomorrow for further drop. And if the bulls break 277.51, the high of today, our new daily higher low will very clearly and quickly be set. Could this be a daily bull flag? Absolutely. At this point, the amount of consolidation we've seen would keep that a possibility. We're watching our weekly resistance of the exponential moving averages. We are watching for a weekly lower high, but we don't have any confidence in a weekly lower high being set until we lose the daily uptrend. Keeping an eye on Bitcoin, and you might be saying why? Because it's doing the same thing as SPY, but there's some clues back and forth. The S&P 500 has given us clues to Bitcoin over the last month, and Bitcoin a couple of times has given clues to the broader market, leading moves by about a minute or two. So same thing on the weekly for Bitcoin. We're looking for a weekly lower high. We're looking at exponential resistance. And today and through the weekend, we pulled back. We had tons of space to maintain the daily uptrend. We set a higher low. We failed to see continuation. And then we broke support. So a bit more of a pullback on Bitcoin and keeping an eye out for something similar on SPY. But if that something similar were going to happen, I would need to see a daily pullback down towards at least the mid 260s to then be looking for a daily lower high on a bounce and then lose the daily uptrend. So again, that's a bigger picture setup that I'm keeping an eye out for. But if these bulls show up over the next couple of days as we start to see some potential positive headlines on states like California and Oregon and how they're going to reopen their states, that could tell us that our weekly lower high has not been set yet. So daily consolidation underway, no bear follow through at this point. IWM, same story. Gap to fill was 119.24. That did fill. Consolidation is underway, but tons of space where anything above 102.60 is a daily higher low. A weaker close on IWM than SPY, and less likely to be a bull flag with the current consolidation. That lower wick on SPY and the bull move in the last hour is helping that possibility for the daily bull flag remain intact. Look at QQQ. Not even really seeing any notable daily consolidation. We did break the low of Thursday, but only by 28 cents. And here we go with the highest close on the entire bounce. And you have names like Netflix with huge strength. So we have our Corona tech names. How about that move for Netflix? Kept the daily uptrend intact. We had a tightening range, big bull break, back to over the level that we were at before we saw the coronavirus, and a very significant bull break that now has us looking to the all-time high 423. Likewise, Amazon, all-time high is within striking distance. So the tech sector definitely holding on really well. No notable daily consolidation, and after resistance of 203.42, as we did break the high of last week already, we're looking at 204.30 as the next level, and there is no indication of the weekly lower high being set at this point. We know we're going to have to see weakness in the tech sector for the S&P 500 to get any notable pullback. And right now, the S&P 500 bulls are keeping that control thanks to the tech sector bulls. So the financial sector is the reason for the market weakness that we saw today. Obviously, a very different picture with XLF down 3.6% and QQQ up 1%. We have the majority of, or the major financial sector names going to give us earnings this week, Tuesday, Wednesday, Thursday. So that's something we're keeping an eye out for. And we are either going to see a notable pullback to look for a daily high or low. So the bulls are comfortable in the sense that even if we have bearish reactions to earnings, we're going to look for a daily high or low compared to 1936 unless it's massive bearish reactions to those earnings. And if it's a bullish reaction, then we will likely see continuation. So same thing, we are looking for a daily high or low compared to 1936. Need an hourly trend change back to the bulls to be looking for a daily high or low to be set. And right now we're seeing some tag team action where we ended last week with the financial sector leading the way for the bulls. Now the tech sector is taking its turn. And as long as they're doing this back and forth, and as long as both of these sectors are not pulling back significantly at the same time, the S&P 500 is not going to pull back significantly either. That's something I'm keeping an eye out. I know the bears have the most momentum when both of those sectors are weak at the same time. And when they do this back and forth action, little mini sector rotation, the S&P 500 doesn't get a ton of follow through for bears. So XLV, daily consolidation for the healthcare sector underway as well. Short-term support of 90.22, but the most important level for me is 83.93. Could it be a daily bull flag? Yes, absolutely. It is similar consolidation to what the S&P 500 itself is currently doing, and there are no red flags for the bulls at this point. XBI, same thing, holding up well. Low of Thursday, broke, but only by 11 cents. So bulls looking for a daily higher low to form, anything above 72.38, and daily uptrends will have to be lost if we're going to have any confidence in weekly lower highs being set in any of these sectors. SMH, the semiconductors, they have daily consolidation underway as well. So far it is very healthy. Close at the high of the day today. Anything above 110.18 would be a daily higher low, and resistance will be the top of the bounce to this point. So as far as our sectors go, bears definitely need more follow through. Keep in mind the burden of proof. While everybody is bearish on Twitter and social media and talking about testing the lows and all that, if we do not see significant follow through for the bears, and if we do not see losses of daily uptrend, the bears prove absolutely nothing. Price is my guide. What I think should happen, what I think the economy is telling us, is not my guide. Price every single day is my guide, and as long as we maintain strength, I'm going to be looking bullish. So burden of proof short term is on the bears. Prove to me that our weekly lower highs have been set, because if you don't prove it, and if you don't show me some notable bear volume and weakness in the tech sector and the financial sector at the same time, then I'm not going to have confidence in weekly lower highs being set. TLT, just a slow fade still. We lost the daily uptrend, and we are not seeing a significant pullback, but slowly but surely it's adding up. So weekly lower high, and we're looking for a weekly higher low compared to 139. Tons of space for that weekly higher low to form. Bulls will have to regain the daily trend in their favor for that to be the case. And the VIX, puttering around, watching 36.20 as the low, and bulls aren't really showing us anything. We're just seeing little lower highs and lower lows. Short-term key level 47.50 and 36.20 is the most important level for me. And if we pull up the leveraged ETFs, those supports are in play now. 225 is that low, and 236 the low of today. Gold, beautiful breakout. 7-year plus highs on gold as we have broken 1703. Futures prices did it before spot prices did. I care more about spot prices because I have a position in GLD, which is trading based on the spot price. So very nice continuation. My stop at this point is going to be under 1641. We'll see if I get to move it up. Very significant follow through. 4-hour uptrend healthy. We'll just look for a higher low and exponential support when we pull back the weekly time frame. V-shaped recovery to higher highs, and I'm just going to continually walk up my stop as long as we are in a daily uptrend on XAU USD. Strengthened silver as well, but again, a very different look. We are not going to break weekly resistance on silver anytime soon. Silver looks exactly like Bitcoin and exactly like SPY with the weekly setup. Exponential resistance, 4-week little bounce here, but well off of the high that we came from And we're watching XAU, XAG to show us who's stronger, gold or silver. We certainly know gold overall, but once this weekly higher low is set, which the bulls are attempting to do, that's when the gold bulls are going to look to gain even more ground against silver. And right now, anything under 116.84 would be a daily lower high, but the bulls are going to be looking to change that trend for a weekly higher low to be set after a few weeks of consolidation. Miners, very impressive breakout. We were watching for the potential of a top fishing play with 27.21 as soon as gold broke out. Very convincing breakout for these miners as well. Look at that strong close 2 days in a row now. And we're looking at 31.84. It would be extremely impressive to see this V-shaped recovery and break 31.84 with 5 big green weeks in a row. I will be keeping an eye out for the potential of a top fishing play with that resistance level tomorrow. If I can get myself in a position where I'm risking, if the price is at 31.50, I will potentially look for a short opportunity off of that resistance. That being said, when we top out, bulls have a ton of space. Anything above 23 will be a daily high or low. Hourly uptrend is our guide, and for GDX, anything above the low of the day today would just be an hourly high or low. Oil, another point in favor of the bulls for the S&P 500, not only their recovery today from weakness in the morning, but the fact that the S&P 500 has seen a 50% retracement just about from the high of the all-time high, the low of the dump, 50% retracement with oil doing this. Oil is doing nothing for the bulls. We saw a bounce, we saw a sell the news reaction to a deal being reached with OPEC, and we are looking down at 2207 and then 1929. And we're in a daily downtrend. We've never changed the daily trend on this entire pullback. We are seeing weakness across the board in oil. And if you've been trading long enough, you certainly know there's plenty of times where there's been significant correlation between oil and the broader market as a whole. But this is one of those scenarios where, again, I've said it multiple times, it's a bullish favoring correlation in the sense that we are not seeing the S&P 500 bulls inhibited by oil weakness, and any oil bounces can only help the S&P 500 bulls. So at this point, I would consider anything under 28.32 as just a little daily lower high, keeping the bears in control. But if we can set a weekly higher low, it is a weekly bear flag right now. If the bulls can hold 1929 and break 29.11, that will be a notable shift in momentum. But at this point, that's a $6.50 move for a bull break, and it's only a $3.30 move for a bear break. So keeping an eye on oil overall. Bulls not proving much to us. Let's see what the 12-hour looks like. That's been useful in the past. Clear downtrend, high, low, lower high, lower low, and keeping an eye on that downtrend. Natural gas tried to set the daily higher low with a spike today, but gave it all back. Looking at the 4-hour time frame, lower high, lower low. Anything under 1782 will just be a 4-hour lower high. Still keeping an eye out for a daily higher low, tons of space above 1477, but the only way the bulls are going to prove anything to us is to set that higher low and then change the daily trend by breaking 187. And that's where we stand in the market as a whole. Keeping an eye out to see if the bulls are able to see follow through from here with the financial sector earnings reactions as the most important factor here in the middle of the week. Hope you had a good day. We'll see you soon. Mostly just flowers left. We've got some basil, green and purple basil, some sage and some dill. This is rhubarb, but everything else is flowers. Just mulched a bunch of the garden beds where I'm going to stick all these flowers when they're ready. It wraps all around here. So pretty much in front of all these bushes where they won't get blocked of sunlight. Raspberries are going off. Lots of green growth. Blueberries putting out their flowers. Planted a bunch of extra everything, so a bunch of transplants that I have of celery and kale and chard I'm just sticking out here in the garden bed, so any animals that want to eat them are welcome to it. Hopefully they leave my garden alone in return. This elderberry was one of the first perennials to really explode with the first signs of warmth.